Thank you for joining us at xm.com for today's market comment by Rafi Boyadjian. I'm Maria Bashirthis. The European Central Bank raised its key lending rates by 25 basis points on Thursday, taking some investors by surprise amid a split within the Governing Council heading into the meeting. With energy prices creeping up again and core measures of inflation still elevated, the ECB's actions shouldn't have been totally unexpected. Even if a full-blown recession doesn't materialize, stagflation seems like the most optimistic scenario for Europe right now, and that's why the euro's knee-jerk spike higher as the announcement came in lasted only a few seconds. The ECB's carefully worded statement implied that rates at current levels should be restrictive enough to bring inflation down to 2%, wiping out rate hike expectations, while pushing up rate cut bets for the second half of 2024. President Christine Lagarde wasn't able to ease the euro's pain much, even as she stressed in her press briefing that rates have not necessarily peaked yet. The euro closed 1.1% lower on Thursday after touching an intraday low of $1.0629. Adding to the single currency's woes yesterday was a fresh excuse to buy US dollars, following somewhat stronger than expected retail sales and producer price data. Rate hike odds didn't move much, but expectations for rate cuts were slightly scaled back, lifting the dollar index to a 6-month high. The greenback is slightly softer today following some encouraging economic indicators out of China. Both industrial production and retail sales rose more than forecast in August, adding to hopes that Chinese authorities' efforts to boost the economy are starting to have some effect. The People's Bank of China cut the reserve requirement ratio by 25 basis points for all banks on Thursday, while earlier today it further boosted liquidity through reverse repurchase operations. Wall Street is headed for a positive close for the week, despite the strong possibility that the Fed may have to hike again, even if it pauses next week. In the meantime, there's a risk for some volatility on Friday, as it's triple witching day, when stock options, stock index options, and stock index futures all expire on the same day for the month and quarter. Commodities were also buoyed by the improving economic picture in China. Oil futures climbed to fresh 2023 highs, and gold rose for a second day. Thanks for watching today's market comment here at xm.com.